My name is Francesca Young. I'm the Emerging Markets Editor at Global Capital, one of Euromoney's sister publications. We are, of course, meeting today after an extraordinary year in the emerging markets, of which the CEE is just about still part of. I'm told it's very rare for a full 12 months to go past without any kind of hiccup that stops Eurobond issuance, but that's what we've had. But it does leave us to wonder kind of what the next year holds, whether we're on borrowed time with potential US rate rises and the tapering of ECB buying on the way. Is this year that potentially a sell-off could bite? Luckily, we have assembled here today with us a group of panelists who have some very firm views on how CEE sovereigns should be funding themselves over the next year and how to potentially manage any volatility. I'm going to go ahead and let them introduce themselves. Yorgi, perhaps if you could start.
You mean the questions? Or?
Just introduce yourself.
My name is György Barc. I'm from Hungary, managing the public debt as a CEO of the agency.
Daniel?
Good morning to everybody. My name is Daniel Bičanek, and I'm representing here a Slovak debt management office called Ardal under Ministry of Finance of the Slovak Republic.
My name is Marin Tijak. I'm Director General of the Treasury Directorate at the Ministry of Finance, Republic of Slovenia.
I'm Branko Drčelić, representing Ministry of Finance of the Republic of Serbia.
Hi, good morning to everyone. My name is Alexis. I'm Head of Debt Capital Markets for the region at BNP Paribas.
Okay, so last year, around $90 billion worth of Eastern European debt was placed, which I gather is around 50% more than in 2016. So I suppose the first question I have to ask for you is this the new pace of issuance for the region? What are your funding plans for this year?
Well, our one, I think it's pretty well known, I hope, because we publish every year-end the plan for the coming year. So we published it in December for this year. We have, simply speaking, on FX that 2.2 billion redemption, and we plan 1.2 billion gross issuance. So we plan to continue to decrease the FX share at a moderate pace. Of course, we can be flexible on this depending on market conditions.
In our case of Slovakia, last year was very interesting for us and quite successful, I can say. We print more than 6 billion euro through the syndication and the auctions. We extend our duration and average time to maturity. But plan for this year is only 4 billion euro or 4 billion to 4.5. Reason is mainly decreasing our deficit, and we have some gap in our maturity profile. So this year will be more relaxing for us and more quiet, maybe.
Taking it easy.
So a little bit easy.
Marian?
For this year, we are actually having in mind to issue at around 2.2 billion euros of new debt of Slovenia. We were early this year on the market, issuing new 10-year bond. With this, we fulfilled most of the funding needs of the Republic of Slovenia. In February, we start to operate the Treasury bill program of Slovenia, and we are left with some residual long-term funding for the rest of the year. These figures are excluding possible liability management operations of Slovenia Treasury.
Okay. Last year, Serbia, due to good fiscal results and the surplus in the budget, didn't have need to go to the international market. So the first Eurobond which matures for Serbia in November 2017 was paid from liquidity reserves. So for this year, Slovakia, our gross financing needs are 4 billion euros. Most of these needs will be financed on the domestic market in dinars. And for the first time, we will issue 10-year dinar benchmark bond in dinars. Also on the local market, we'll do euro transactions. We have also the funds from the international financial institutions to disburse. And also we are planning to do this year 1.5 billion euros of the buyback operations according to the law on budget for 2018.
Okay. And Alexis, perhaps as a DCM banker focused on this region, perhaps you could tell us a little bit about your issuance predictions for this year, and also perhaps if you're recommending front-loading funding given the potential for volatility.
Sure, thanks a lot, Francesca. I think what one has to recognize that if you look at public data, this year's market is opening not in a good way. It's opening in an exceptional and strong
Well,
way.
I think I mentioned to you before the
Yeah.
panel, I mean, Macedonia to 2.75%
That
is extraordinary. I mean, someone was talking to me about this being the rate that Germany was paying in, 7 years ago or so.
Yeah, that is one example. You will have, from the region, the Slovenia transaction, which Marianne superbly led at the very first hours of this year. But if you look at also Latin America or Asia Pacific, we've already seen a very, very large number of transactions. Even in the Middle East, we had Oman with 6.5 billion. We had Mexico come twice to the market with dollars and euros, and so on and so forth. So to answer your question, I would say, if I would put myself in a situation of, running debt management, let's imagine this fictitious position. And if I had money to borrow, because the rule is never to borrow money when you don't need it, but if it was the case, I would definitely seize the current market windows. It is exceptional at the moment. Mark my words, I'm an optimistic person, but I would also equally say if I'm not comfortable in the market, I would say at the moment it's exceptionally good.
I mean, I know, of course, the banks always like to say, issue now, go early. It seems to be quite a usual thing. I mean, for the treasuries, is this something you are actually looking at doing this year? Will you be front-loading funding?
Well, if I may start regarding front-loading issue. I mean, Slovenia in 2015 exited excessive deficit procedure when debt reached its peak, so of 82.6% of GDP. From that time on, Slovenia need to comply with the debt rule. So we have end-of-year debt to GDP levels of the general government debt. This year we are targeting 72% of GDP general government debt level, and the funding will be executed to the level that we will meet this target. So we have limited room really to execute pre-funding in this year. So what we're doing, we had this end-of-year debt to GDP targets also last year and year before. We've executed liability management transactions on I would say, sizable scale to benefit from this low yield environment.
Okay.
Also, in our case, we have quite a specific situation in funding this year because we are also responsible for all state cash flow, I can say, and we have to maintain some cash reserve, and cash reserve is now it's not the priority because there is no revenues of our cash reserve, so funding later is better in our case. So we will postpone the transaction maybe to the second quarter.
So other practices at play. Yes. Okay. The rates that CEE sovereigns, as we've said, it's opened exceptionally well. The rates that CEE sovereigns are paying are at an all-time low. There is a potential expectation of volatility this year, and I gather that we actually have some interesting tech going on at the CEE Euromoney conference this year, where the audience can vote to see various outcomes of questions. So I'm going to be the guinea pig for this. I gather no one's done it yet. And I'm hoping that you can all log on to the app that we have. There's a live poll on the CEE Euromoney app. And I'm hoping that you guys can look into your crystal ball for us and tell us what your expectation is for spreads at the end of this year for the CEE. By the time we finish this year, are we going to be at spreads that are lower or higher or roughly the same as we are right now? And hopefully that'll give our panelists perhaps a little bit of insight, because these things tend to be self-fulfilling prophecies. So anyway, carrying on, the spreads have become lower in part because of the growth of some of these countries and a growing sophistication in the capital markets, but also in no small part because of the effect of quantitative easing and the knock-on effect of the European PSPP program. But as QE abates, do you think that there is a risk of investors leaving the sector? What do you guys think? Do you think that spreads could increase?
Well, we have been relying mainly on domestic financing in recent years, and currently our yield curve are at a historical low level, and also volatility measures are quite good for the Hungarian local market. And we receive, I think, generally good feedback from investors, because they see that partially the active policy of the central bank, partially because we have quite an important and significant retail bond program. Our wholesale market is less correlated vis-à-vis core markets, even probably vis-à-vis CEE markets. So some investors see Hungary as somewhat good investment for diversification. And we continue to pursue these policies. In this respect, FX issuance has been a good flexible tool. When we saw that local currency financing is enough, then we waited, and last year we organized also an ALM transaction like Slovenia has been doing quite a few times. So that's what we did in order to keep the net FX supply zero. In terms of spread, we have two positive outlook from the three big global rating agencies. So I think in terms of spread, we can be somewhat positive that over time it has more room to compress. Will it happen through lower yields, or will it happen with higher core market yields? That's a question for this year. If I may just add something that I see the street view, call it this way, is more or less from a macro perspective, it's the same like what we had heard last year and the year before. But people are a bit different in a way that last year and maybe the year before, a lot of people were confident about rising global yields. Nowadays, probably because the prediction was not so good for last year or the year before, they are a little bit softer on what this macro story could mean, for global macro story could mean for markets. So I think this will be an interesting year for everyone.
So in the case of Serbia, currently the interest borrowing costs of the Republic of Serbia are on the historical minimum, and I see that there is still some space to decrease these borrowing costs, especially because still we have some risk premium higher than other countries in the CEE region, but also I expect that credit rating of the Republic of Serbia will improve in coming years. So even there will be some pressure to increase the yields. On the other side, the increasing credit rating of the Republic of Serbia can be the other factor which can keep the risk premium on the Serbian risk on the current level or slightly higher. But for 2018, I expect that borrowing costs of the Republic of Serbia continue to decrease.
Marian, perhaps you can add something, with regards to as quantitative easing ends. What does this mean for your kind of funding costs, and how do you cope with that kind of change?
Well, we all need to have in mind that funding costs will go higher as we move forward. So we are preparing for this. So we've done a lot of things to be ready for this. So all the liability management operations which we've done, we did it in the context of possible yield increase. As you know, we on the large scale actually refinanced bonds maturing in US dollar denominated bonds maturing in 2022, 23 and 24. As we were expecting that yields might be higher during this period. So we refinanced this with longer dated euro-denominated securities, which improved risk metrics of the Republic of Slovenia debt importantly. We also brought down the US dollar-denominated debt from 30% in 2014 to 11.6%. This is going further down as US dollar-denominated bonds are maturing this year and next year. So, this is one way how we were preparing for this. We also actually arrived to a well-distributed redemption profile, so that we actually have now well-distributed bonds with lower coupons, so that possible rate increase would not actually surprise us too much, or it would not have too negative implications for the interest bill the Republic is paying to service its debt. So we've done a lot of things to do that. Regarding where we see rates, so we have different scenarios, obviously. So baseline scenario is that actually underlying rates would start moving to different levels, while credit spreads would need to remain contained. But there are other more adverse scenarios. Underlying rates to move to different levels, it is not a bad thing at all. So we would all want this to happen gradually. I believe the European Central Bank would manage this exit in such a way that these moves would be gradual. While credit spread of Slovenia should remain at similar level. So it will very much depends on the structural policies the Slovenia will be conducting in the future. So Slovenia is reducing its general government debt as a percentage of GDP. So we arrived this year to balanced budget. So we have fiscal rule in our constitution. We are more than complying with the debt rule, so we are doing much better than what the European Commission is requiring from Slovenia. So taking all this into account and other factors, how economy will perform, how flows will go globally, I believe that spreads would remain contained.
If so you think the spreads will be as much driven by the growth of the economy, by internal factors as much as a potential kind of increase in rates and
Indeed.
Yeah,
Indeed. We don't exclude
investors leaving perhaps because of the attractiveness of other sovereigns.
So we don't exclude obviously spreads to widen even significantly, but we would be in good positions to look at other markets if this would be the case. So now US dollar funding, measuring it after the swap and comparing it to euro local funding would imply some spread differential. So if spreads on euro market would widen, so this would close. So we would have opportunity to execute funding on a global market, which is deep and robust. And Slovenia established excellent track record there. So we would adjust our funding operations according to the different scenarios. We would want to actually baseline scenario to materialize, but we are ready for anything.
This kind of playing between euro and dollar debt, is that something that any of the rest of you are considering in terms of a potential solution or potential cushioning for what may come?
Yes, in Serbian case, we want to decrease the dollar share in our public debt. In comparison with the last year, we decreased the dollar share in our debt portfolio for 4 percentage points. We want to decrease the volatility of our public debt because in the past, because we had unhedged position, we have negative impact of the dollar appreciation against euro. Last year we benefited from the dollar depreciation against euro. So with decreasing the dollar share in our debt, probably we will decrease in volatility. Even that we are now have the benefits of this, but the priority of our debt management strategy is to keep the most of our public debt in the dinars and euros.
I would like to add to what Marian said. We have very similar experience and we are sharing maybe similar know-how and we did similar job like Slovenia in terms of our strategy, I can say. In our case, tapering has been started in beginning of the year 2017 because activity of our central bank were lower than, for example, 2-3 years ago. They dropped down from the level of $500 million per month to only 100-150. So tapering is already there. And in short-term horizon, in our case, I think that our absolute cost will stagnate because we are quite good prepared for bad times. We have extended duration, average time to maturity. We have introduced long-term issuance, 20 years, 30 years. And currently our cost is all-time low. So we expect it coming months or not coming months, maybe second half of this year or next year. Maybe the interest rates will go up, but very slowly. And it will be compensated by our fiscal policy and behavior of government, because gross debt against GDP is going down and the deficit is going down. In time horizon of 2 years, our state budget will be balanced. So combination with it will compensate additional cost, and probably our tactic or strategy there will be some change, and we will prepare maybe short-term or middle-term financing, and the cost will be lower, and this way we will compensate additional costs. So we are safe for coming 3-4 years, I can say, with significant impact to our state budgets.
And of course, the euro and the dollar markets are not the only international markets that you will look at. I mean, the AKK has had some experience with regards to Asian markets recently. Perhaps you could talk us through a little bit, Jorgi, with regards to Hungary's experience in the Pandable markets.
Well, it has been a long exercise because it's a new market, and the regulation is also developing with the market. We wanted to be part of this process because just the sheer size of the market is so large that I think over time it should be a competitive global market with other big markets. Maybe it will take 5 or 10 years, but if you are there and you have a presence and people will know your name, over time it could help. So it's better to start early. We also did the dim sum in Hong Kong, and altogether we experienced somewhat higher interest from Asian investors. So there is some additional benefit that they come to Hungary, not just to these issuances, but also mainly hard currency or euro and dollar investments. They are very cautious about local currency market investments, but they are more active in FX, and even some big investors they have the offer or the interest to do a private placement in big size, like in the $100 million size, to do a private placement, which is, in case of Hungary, I mean, it's a new thing, and it was a kind of a positive surprise for us when we sat on the one side of the table, and on the other side of the table somebody is saying, well, if you want to issue $100 million or $200 million, we can buy it in one deal. It's not a bad thing, of course, but on the other hand, of
and
course,
you didn't take the money and just run?
Yeah, we do normally, FX issuance via auctions. That's what we believe in a transparent and competitive way. But of course, it's a good thing that we have some kind of an additional option that we have not yet exercised, not have used, but it could be an additional tool for the coming years if we see that attractive.
So if there's that kind of money that's willing to be put to work in Asia, is that something that the rest of you are considering, or are there reasons why you wouldn't bothering trying to tap that pool?
In general, we see only one big advantage, and advantage is diversification of the investors' base. It could be important when you repeat such transaction in consecutive years. So this is advantage, but there is a lot of disadvantages. It's demanding transaction. Georgie will agree. I hope so. So it's good preparation.
Just in terms of the travel and the time difference?
Traveling, administration, etc. So hard work, and compared to very good condition in European markets. So
it's too easy for you here.
Yes,
that's the problem.
Too easy. It's one auction, or less than one auction. So our preference is to stay in Europe in coming years.
Okay, sure.
So if I may add, you wanted to say something? So we are actually measuring funding costs of Slovenia after the swap in euros in different currencies. So now, I mean, from our point of view, this would make a lot of sense in the midterm. But now this is way too expensive for Slovenia.
In Serbian case, we have not like Hungary, the relation through the panda boats with the Asian market, but with the China, we have the different kind of projects which are financed by Exim Bank of China. So the Chinese bank is financing projects in energy sector, infrastructure sector, railways and highways. So probably in next medium-term period, we will continue on this kind of cooperation.
Alexis, can I ask, is this something that you're encouraging in terms of the diversification of currencies, or do you think that actually, the euro and dollar markets are liquid enough that there isn't really a need at this point to go and get that slightly more expensive funding?
Sure. I think it's a very interesting question, Francesca. We encourage it, but moderately. And allow me to explain in brief terms. First of all, those transactions so far are on niche markets. Of course, those niches are increasing. But what do I mean by that? I mean that all those gentlemen around the table, they need to focus first on raising the money in their traditional pools of liquidities, euros, potentially dollars. So that is where they really get the bulk of the demand, the bulk of the volumes. So those transactions in Asia, they are more of a niche diversification opportunities. So if they do make sense, Marianne raised the point of the swap. It doesn't make sense to do a diversification trade if it doesn't make any economic sense. That's another factor of why it needs to be moderately, I would say, promoted.
But surely the more you enter these markets, the more familiar the investor base becomes, and
Correct.
you only get there by
Correct.
making that effort.
However, and again, I'm not here against at all those transactions. On the contrary, I'm a promoter, but on a moderate basis, I want to be very realistic and tell my clients what we humbly think would be the best and not sell them, something which doesn't make sense. But those transactions, I think, Daniel, you raised it very well. They do take a lot of time. Traveling, in a way, is the easy part. The translation, the back and forth, the jet lags, you have conferences at very late hours because on the other side of the planet, that's
It's not so
daytime.
easy as coming to Vienna, I
So
gather.
if you compare that between doing a euro transaction, which is your time zone, which is straightforward, which is your currency for two of our friends here, you see you have to balance as well all that. So it's a great thing to look at what's happening in other parts of the world, but I think we have to be realistic about them. They are not where you will get your total funding. They take time, and also they need to make economic sense. These will be my answers.
Can I ask, what are you recommending in terms of CEE sovereigns and in terms of their increasing investor base, tightening spreads further? I mean, the CEE is kind of seen as the blue chip credits of the emerging markets, right? So
Yeah.
What can they do to tighten their spreads further?
To tighten the spreads further?
Exactly.
I would say, for me, CEE has become for global investors, it's a safe asset. It's a safe asset class, right? You get very tight spreads in most cases, but you need, in a way, those tight spreads because that's your hedge against more volatile, more high-yielding assets which you have in your portfolio. And it's a good region, economically, politically stable. We can talk about it for hours, right? So it's so great it was going to be there. For the spreads to further tighten, I'm not that sure, to be honest, if there is anything else than...
Is this it? Is this the floor?
What they can do is continue the reforms and continue to improve the economic prosperity of those countries, which, again, if you look at the last 10 years, what has been done is immense.
But in terms of the capital markets, you think everything is being done as well as it can be at the moment?
But as an exogenous factor, for the spreads to tighten because of global demand, I think there's a point below which we're probably not going to go further. Like, I may be wrong, but I don't believe we will get back to extremely negative spreads which we had in the past, because precisely quantitative easing is going the other way around progressively. But they are, at the moment, all our friends on the table benefit from considerably tighter levels. I mean, I remember, if I look at Hungary or Slovenia, it's remarkable. I'm not talking about Slovakia, because Slovakia was already for a long time very tight. It's very impressive. I think the pace of their reforms and the promotion of their economies will continue to do well, indeed.
I would just like to give you a comparison of the our funding this time last year. So we executed 10-year bond issuance at mid-swap plus 63 basis points, while this year we executed funding at mid-swap plus 13 basis points. So this is what Alexios was talking about. So we don't know. Yes, I mean, Slovenia was issuing 11-year bonds in 2007 and 8 at minus swap, minus 7 and 8 basis points. So there is room further to improve. Yeah.
Speaking of niche markets, of course, Poland went into the green bond market last year to great fanfare. Again, is this something that any of you are considering? Branko,
You know, you can always consider the new instruments like the green bonds, but we always need to think about, you know, from the risk profile of our public debt, what's the best option and optimize our position. So in this moment, Serbia has a lot of available funds from international financial institutions where we get the loans for such a projects in ecological sector, where we have repayments up to 30 years and the borrowing cost in the fixed terms only 1%. If we talk about floating rates, it's even close now to 0. So with this kind of instruments and the green bonds on the other side, we are preferring in this moment IFI's loans. But for sure, in future, we can consider this, you know, as on the other side, IFI's funds are not anymore available like now in this moment. But in this situation, probably this will be something what we can be considered in the future.
Alexis?
Yeah, no, I think the green bond, again, I would probably take the same approach. I think it's a great instrument for countries who do have a green project or a sustainable project. Because let's not forget, a green bond is investors giving you money to fund specific projects, right? It's a bit like in the past or today, the sukuk market. You need to have specific assets identified. So a country which does not have any green project, like building a new sustainability, water plant, whatever, green bond doesn't make any sense for it. However, a country which is really saying, okay, we're going to change the way we produce energy, go into renewable ones, etc., then it's a subject of discussion. In the case of Poland, Poland was the first to come to the green bond market. You know, they may have found this idea a fancy one in the past, but today for them it makes sense. You know, all the coal energy, you know, transformation plan in Poland. That is why the green bond makes sense.
And if there is that kind of green project in place, are there actually savings to be made versus conventional bonds yet? Or
Sorry?
If there is the kind of green project in place that you need to fund, are there actually savings to be made versus the conventional market yet?
It's ballpark the same in terms of pricing. Yeah.
Okay, sure. I've just been given a warning with regards to time. So while we still have a few more minutes, I just wanted to open our panel up to the floor to ask if any of you had any questions.
Hello. Aside from Asian investors, where are you seeing new pools of possible demand and how can you better harness them?
Would any of you like to take that question? The
Sorry,
Middle East, perhaps?
Probably I couldn't understand
Oh,
the question exactly. How
sorry,
much
I'm asking,
demand are we expecting from Asian investors?
Not from Asian investors, but from other potential pools. Are you potentially taking roadshows to Scandinavia or other places like that?
Or perhaps the Middle East even?
Yeah,
I know there's been a lot of talk about that.
I think simply, you know, as you all know probably, that you either do a deal-related roadshow or you do regular non-deal-related roadshows. Because we don't issue FX bonds that frequently. Last year we did a deal-related roadshow and then we did the issuance and the exchange. And the book was almost like 6 times. So I think it's enough.
Anyone else? Is there something that... Like
Maybe just Virginia, just to answer your question as well. I have to talk about Asia just very briefly, because when we talk about Asia, I think most of us believe it's Hong Kong, Singapore, ballpark, right, and maybe Tokyo. But let's not forget Taiwan. Taiwan is, you know, has become over the last 12 months, you know, a huge amount of long-term, you know, buy and hold investor base. The Taiwanese life insurance in particular have been extremely active. I cannot obviously name transactions, but they've been looking at very large ones, high quality, And they're interested in buying long-term, like 30-year dollar in particular. So Taiwan is one. Number two, it's not because I'm French, but honestly, whenever I go to Paris and roadshows these days, you know, I have 3-4 times more investors showing up. And I've been telling all my clients in the past, we perhaps should not, we don't need to go to Paris for roadshows. We should stick to London and Frankfurt in Europe and then the United States. But now we get a lot of demand from France because they're looking to invest more and more down the credit curve. Again, that's my personal opinion. If you have some French asset managers in the room, please speak to them. But as a DCM person, I can tell you there's much more demand we see from France.
Can I ask, is that for the CEE in particular or all emerging
No,
markets?
it's actually quite pretty everything. And the last point I wanted to, even Africa, to be honest. And the last point I would mention after Taiwan and Paris is the US investors for euro. The euro denominated bonds, gentlemen, you will agree, everything you've been raising, normally you would place it for the overwhelming part to European investors. If you look at the Macedonia transaction, small trade, euro, 35% came from the United States. And then you could get some other examples in the region. You know, the US investor base, dollar base, obviously, is now more and more diversifying into the euro. So these would be my 3 complements. I hope it's useful.
Do we have any further questions? Okay, we're still for the moment, so I'll carry on. I suppose something that you mentioned, Alexis, with regards to the Taiwanese investor base is, you know, buy and hold investors, people who are looking to invest in longer dated bonds. From a treasury point of view, how important is it at the moment to extend your maturities? I mean, the CEE typically has not been a region that feels the need to go ultra long. Is that something that could change, or is there a reason that you stay in a sort of quite constrained maturity profile? Branko?
Okay, just from our example, we want to keep, because we think this moment where the yields on the historical minimum for Serbia, we need to issue longer maturities because we don't know what will be in the future, what will be in 1920. So that's the reason why we take the step to issue for the first time 10-year dinar benchmark bond. And we want to keep as much as possible to issue in 2018 long-term maturity bonds. And my colleagues all said that with their debt profile, they are not expecting some big sensitivity if the rates start to hike. But in our case, I think in 2018, this is the big step for the development of the domestic market, and also to keep the interest bill on the current level, which is very close to 2% of GDP. As Minister said on the previous panel, in one moment it was even 3.5% of GDP, what made Serbia one of the countries with the highest interest bill. But in this moment, with extension of the maturities, when we want to keep the borrowing cost on as a share of GDP on this level.
Okay. And Marian, I know you had some thoughts on this as well.
Yes, actually, Slovenia have done this exercise. We've actually extended the duration of Slovenia debt portfolio from 4.5 in 2013 to 8 in 2017, and average with the time to maturity from 5.7 in 2013 to 9.5 in 2017. So this was a decisive extension of the duration of the portfolio. I think it was key. I mentioned we wanted to be prudent. We wanted to refinance early US dollar denominated bonds maturing in 2002, 2003, and 2004 with longer dated euro securities. Most of this exchange was executed by issuing bond maturing in 2040. So we've significantly improved the robustness of Slovenia debt portfolio. And what is very important, so we will be concentrating now at around 10-year part of the curve. This would also represent currently proxy for cost risk efficient funding. We also have flexibility to issue shorter tenors if yield curve Slovenia would move more fast and sharply. So it was key, absolutely. Slovenia concluded this exercise. We are to focus and concentrate funding now on 10-year part of the curve. We want to actually have sufficiently liquid benchmark bonds outstanding to do further work to improve secondary market liquidity. Indeed, it was really very important for sovereigns to do that.
I would like to add our experience. Our experience is that one of the best medicine against debt crisis or financial market crisis for the debt managers is diversification of the investors base and extending the duration and average time to maturity is some kind of diversification of investors base because we have discovered, for example, in transaction for 20 years or 30 years, we saw brand new investors, which was not present in our short-term financing. So this is kind of diversification of investors base.
This is the new investors that I believe
Yes.
Virginia was talking
And
about.
I can recommend to others that extending the duration and average time to maturity is a tool to be safe when crisis will come. Because also behavior of your own investors base, their thinking will change. If they will see that you are present in American market, Japanese market, etc., you have many other options than only stay in the European market. So in our case, in my mind, is maybe to have 10 to 15% of the portfolio in different markets. And for example, American markets works during the crisis and European market was closed. Many countries were present in European market and it works quite well. So.
Worth the jet lag after all. Okay, so I gather, again, with this new technology, and I do gather that I am the guinea pig for this, so I hope this all works. I'm told that apparently we can see the results of the live poll with regards to where the audience believes that spreads will go. So about the same or wider by the end of this year, apparently, by the looks of those screens. Well, there you go, guys. That's what you have. So maybe it turns out that perhaps we should be front-loading borrowing after all. Anyway, I gather that we are out of time now. So I'm going to wrap up now by saying thank you to our panelists. I gather we have a coffee break next, so I don't need to introduce another panel. But please do enjoy your day, and thank you for staying with us.
Thank you very much.
Thank you.